what you have to do with Bitcoin, and I say this to people, you have to study Bitcoin and you have to do the research on Bitcoin. And people that do, say, the requisite 100 hours of research, I would say if 100 people do 100 hours worth of research, 90 to 95 of those people will end up buying Bitcoin. I'm not saying everybody, but I believe that people who really understand it look at it and say, okay, that is a hardened asset. It has the technical properties that we've always looked for in money. You have to think about it for what it actually really is. And this is this hardened, global, fully transparent,
To understand Bitcoin's recent correction, we first need to revisit its rapid climb. According to Scaramucci, Bitcoin's surge to $126,000 in October was fueled by a powerful combination of optimism and expectation, particularly around regulation. Two major legislative developments were anticipated. The Genius Act focused on stablecoins. The Clarity Act aimed at defining crypto market structure. Markets priced in the likelihood that both would pass in 2025. That optimism helped drive Bitcoin to new highs. But markets are forward-looking and fragile. As confidence in these regulatory outcomes began to weaken, sentiment shifted. Then came a geopolitical catalyst. Comments from the US president regarding rare earth minerals and China. While not directly tied to Bitcoin, the remarks acted as a trigger in an already overheated environment. The result? A cascading sell-off. Scaramucci highlights a familiar pattern. At market tops, investors become over-leveraged, overly optimistic, and excessively vocal. When reality diverges from expectations, the unwind can be swift and severe.
I mean, I think I want to go to what started the rise to 126, if that's okay, because it sort of peaked at 126, down 43 now, but it actually got down almost 50%. It was at its low for at least this cycle. It was down about 49%. There's this regulatory component. So now the expectation are that two different pieces of legislation are going to pass. One is the Genius Act and around stablecoins, and one is the Clarity Act, which is around market structure. And so the thought was in 2025, we'd get both of those pieces of legislation passed. And so Bitcoin zoomed up to 126,000.
In October, that was the
peak. But, you know, as everything happens in our businesses, this is my 38th year of investing, and I've been through 10 bear markets. People at the top get over leveraged. They get very ebullient. They get very talky, optimistically at the top. Chatty at the top. Yeah. And so what ended up happening was the legislation seemed less likely to happen. And then you may remember on October 10th, the president was talking about rare earth minerals in China. It could have been anything for that matter, but it sort of pulled the pin on the situation. And then we had a cascading effect where the Bitcoin specifically, other coins did as well, but Bitcoin specifically traded down. So it's important to lay out that backdrop. And so if you're sitting there as a Bitcoiner, I think another thing that happened, the ETFs came into place. BlackRock now has probably one of the largest ETFs in the world, their Bitcoin ETF, known as IBIT. You saw a lot of buying into that ETF. It was from high net worth individuals, some institutions, some pension funds, et cetera. And then concomitant to that, you saw whale selling. And so you literally had people that were holding Bitcoin from $10, $12, $100. They made a decision that north of 100,000, that seemed like a good time to sell. And maybe they had that in their heads from years ago. If it gets to 100, I'm going to take some money off the table. But all that notwithstanding, I think we're in the typical 4-year cycle for Bitcoin. And so what typically happens is, just to give people a quick refresher, Bitcoin launches in 2009. If you read the Nakamoto white paper, you're basically going to have supply put into the marketplace. It's going to be fairly consistent supply. And then every 4 or so years, as it gets to a certain hashing moment, you'll have a halving of the supply. And so the supply halving happens every 4 years or so. About 2 years ago, we went into a halving, Bitcoin halving, where we went from 900 coins per day to about 450 coins. And so what that does is it shrinks up the supply, and it changes the dynamics for the miners, the people that are mining Bitcoin, And so what you've had over the last 3-4 cycles, these 4-year cycles, you've had a period of rising in the beginning of the cycle, and then you have anywhere from a 30 to 50% correction as you get to the middle of the cycle, which is more or less where we are. And then if I'm right about this, the cycle will start to regain traction towards the beginning of the fourth quarter of this year. So you'll start to see probably movement and activity, appreciation by October of this year. And so that's very consistent with how a traditional Bitcoiner would think about it. I haven't sold any, and I've been buying it regularly. And I think what you have to do with Bitcoin, and I say this to people, you have to study Bitcoin and you have to do the research on Bitcoin. And people that do, say, the requisite 100 hours of research, I would say if 100 people do 100 hours worth of research, 90 to 95 of those people will end up buying Bitcoin. I'm not saying everybody, but I believe that people who really understand it look at it and say, okay, that is a hardened asset. It has the technical properties that we've always looked for in money. You have to think about it for what it actually really is. And this is this hardened, global, fully transparent, fully distributed, decentralized spreadsheet. And so the tokens or the pieces of property, the digital property on the spreadsheet, they're immutable. They can't really be changed. There's 21 million of them. There'll never be any more of them. Some think maybe 1 or 2 million of them were destroyed just from the lack of storing them properly in the beginning of Bitcoin. So you have a very small supply, and I think you're going to have lots of global demand over time. Will it be the universal exchange? Will it reach what Michael Saylor talks about, the Bitcoin standard, where it will be our global monetary system? I'm not in that camp.
Okay.
God bless him for being in that camp.
Sure.
I see it more as a digital store of value. I see it more as digital gold. And people my age don't believe that, because when you had the currency debasement fears going on in 2025, gold shot up. You had a K going on, gold was going up and Bitcoin was going down, which tells you that the people above the age of 60 that have the money, Liz, they are still thinking about gold in the old-fashioned traditional way that we think about gold. But I would submit to you that people that are my children's ages in the low 30s will 10 years from now be in their low 40s. And as they get into senior positions in asset management firms, they'll see Bitcoin differently than their moms or dads did. And they'll see Bitcoin as a digital store of value, easier to move around than gold, a lot more transferability, but sort of the same properties and sort of the scarcity of it. And I think it reaches the market capitalization of gold. Now, gold has had quite a run, but it's also had quite a set. So you had monumental volume hit the Bitcoin marketplace in 2025. Now, a lot of that volume, frankly, was absorbed by the ETFs. So ETFs generally have had lots of net inflows over the last roughly 2 years. But I would say to you that you had those two things that you mentioned, plus some whale selling, and then you had uncertainty around the regulatory environment. And so when people go on the air, they come on your podcast, or we may see people on CNBC describing it in different ways, an inflation hedge, store of value, et cetera. I never describe it like that.
Okay.
I say this is an early technology still. It's 15 years old. It's been very hard for people to understand, and it's had the headwind of a lack of regulation or regulatory guidance to allow for its full acceptability. And so that headwind has prevented Bitcoin from really going in the direction that it could go in. Having said all of that, it's probably been one of the best performing assets in the last, I think you could make this statement. I'd have to Google it or ChatGPT it, but I think you could say it's probably the best performing asset in the last 15 years since its inception. It went from a penny, not yet. I think it could be those things.
Okay, so
it's not yet those things. What it is it's loosely correlated to the NASDAQ. It used to be directly correlated to the NASDAQ. It's more loosely correlated to the NASDAQ. As we continue to scale, Okay, I think it will fit the parameters that you see in gold. And I just remind people that gold seemed like a very stable asset until recently. Now, gold itself has had a lot of volatility. If you look at gold trading patterns in the last 12 months, there's been way more volatility in gold than in years prior. And so we have to accept that there's going to be volatility, but I do think over time, this will become an adopted asset class. And I would just recommend to people to learn about Bitcoin. I am always cautious with people. You don't have to make a big investment. But if somebody like me is right and you have a 1 or 2% position in Bitcoin, let's say I'm wrong. And I've been humbled by life. I've been humbled by markets, and I certainly could be wrong. If it trades to zero, you haven't impaired your capital base substantially if you only have a 1 to 2% position. But if I'm right, and it's a $1.5 trillion asset, and I don't know where gold is right at this moment. I'm assuming it's about 30 trillion for sake of this argument.
I did the math this morning,
All right,
about 30.9, I think.
Okay, so if you have a $1.4 trillion asset that could potentially reach parity with gold over a 10-year period of time, and you put 1 or 2% exposure in it, and people like me are right, or Michael Saylor or Michael Novogratz is right, I think you'll be well served.
Interestingly, Scaramucci didn't always believe in Bitcoin. He first encountered it in 2011 and dismissed it. He missed it again in 2014. Even in 2017, during discussions about digitizing the US dollar, it didn't fully click. It wasn't until later, after deeper research and observing key developments, that he changed his mind. His checklist included widespread adoption, millions of wallets, secure custody solutions like Fidelity digital assets, regulatory clarity. Once those pieces were in place, he made a significant investment, but it came at a cost: lost clients, industry criticism, reputational risk. Major figures like Warren Buffett and Jamie Dimon openly dismissed Bitcoin, yet Scaramucci stayed the course, driven by one key insight: exponential scaling combined with fixed supply.
I'm saying the overall market cap, 21 million coins into the marketplace, I think could trade close to $30 trillion. That would be roughly—
Over how long? I
would say it would probably take 10 to 15 years.
Okay.
But the question is that a good investment for you to go 20x on something in 10 to 15 years? For somebody like me, it is. And so I own a lot of Bitcoin, and I've recommended it to people. And I made a decision, and it cost me, by the way. I made a decision to pivot a part of our portfolio into Bitcoin way back in October of 2020. And so I think we've been generally right directionally, and I think we'll continue to be right, but we got to get the regulation right. Well, I got it wrong. So let's talk about where I got it wrong. I was introduced to Hal Finney, who was the first recipient as a computer programmer. Way back in 2011, I was at a presentation. He was at the Ames Research Center. He was making a presentation on Bitcoin. I did not understand it. And I think I put out a tweet: Bitcoin is ridiculous. Don't understand it. Caveat emptor. There's a tweet for everything. And then I got introduced to it again. I was at our SALT conference in Las Vegas, and the Winklevosses came, and they were describing Bitcoin to me backstage in the green room, and my eyes were glazing over. And I was like, okay, I don't understand it. I'm not going to invest in it. And so I infamously was in the White House for 11 days. Yeah, I got my ass fired after 11 days. But I can tell you,
10.
No, don't chip
Google
me out
says
of
it's 10.
No, don't chip me out of that last day. Okay, that was a big day for me. It's when I got fired.
That's true.
But anyway, I'm in the White House, and this happened on a Wednesday, Liz. You know, I know because I was only there for one Wednesday. So I know it was a Wednesday, okay? And these two guys came in from the Fed, and we were sitting in the Roosevelt room with them, and they were talking about a white paper related to potentially digitizing the US dollar. And I was looking at them, and my eyes were not glazed over. So I missed it in 2011, 12. I missed it in 14. It's now 2017. I looked at these two guys and said, wait a minute, you're going to digitize the US dollar? It didn't happen, but the idea was to digitize the US dollar on the blockchain. And they said, yeah, on the blockchain. Like Bitcoin? Yeah, like Bitcoin. And I said, okay, I've got to get myself up to speed. And so I got fired. I went back to SkyBridge, and then I turned to my staff. I said, there is something here. We got to do more homework on it. And so I put down a checklist. I said, it gets to 100 million wallets. I can store 9 figures of it safely. I certainly didn't want to put it on a USB. And if I had a good understanding about the regulation going forward. So let me just talk quickly. It got to 85 million wallets. Fidelity was allowing you to store it at Fidelity Digital. And they had backup systems, and they had insurance from Lloyd's of London. And then the third piece, the IRS deemed Bitcoin intangible property. And so I didn't learn many things in law school, but one of the things I learned is that when you have property rights in a country like the UK or the United States, they're sacrosanct. They go all the way back to the Magna Carta, and generally your property rights in the country are protected. And so when those three things happened, we made a strategic decision to go in big, this monumental decision that you're talking about. And it cost me. I got fired by some of the wirehouses. Some of my clients fired me. Is calling it a decentralized pet rock. And Warren Buffett is calling it rat poison squared. And other people are calling it internet magic money. And you're making a 9-figure investment in it.
Yeah.
It's a very
contrarian, to say the least.
It's a very controversial thing. But what gave me the confidence was the scaling. What gave me the confidence is having invested in things like Amazon or Apple Computer or NVIDIA, is that this was scaling, and it was scaling organically at an exponential rate. And as it scaled, due to the scarcity of the actual asset, that just meant there was going to be a supply-demand imbalance. There would be more demand than supply over long periods of time. Now, certainly from October to today, there was a cascade of selling.
Sure.
But if you zoom out, I bought it at 15, 16. It's at 69. Do I think it's getting to 150? Yes. Can I tell you the exact time? I cannot. It's very, very hard to predict. But I think if you're talking about people making big bets in their life or making a big decision, I would say the homework has got to come first. The conviction, you can get fortified with a lot of conviction if you've got the homework right. My buddy Michael Saylor, who you've seen on CNBC, and you know him, and he wrote the foreword for my book, The Little Book of Bitcoin. He hated Bitcoin, didn't like it, didn't understand it, did the homework. He said, oh my God, this could become the operating layer for money transactions in the future. And of course, he was competing. MicroStrategy was competing against a company called Microsoft, didn't do too well. But now he has this opportunity to buy, in his mind, the software for the operating layer of the future of money transactions. That's why he's been so bold and so passionate about owning 3 or 4% of this network. And so for us, we own it in a smaller way, but we're equally committed. Don't buy it indiscriminately without having some awareness of what I'm describing to you, this sort of decentralized, hardened spreadsheet, which has the technical properties associated with things that we attribute to store of value. You have to get conviction on that first.
Okay.
If you get the conviction on that, buy a small amount of it. You don't have to buy a super amount of it. I could be wrong, and I want people to know that. The third thing I would say is you have to have at least a 4 to 5 year period of time with Bitcoin. Don't trade Bitcoin. I don't know anybody that has bought any high in Bitcoin that has not made money. So said differently, if you bought the high from 5 years ago, you're probably in the money right now. If you bought the high in October at 126, you're not in the money, but I would imagine between 2025 on your way to 2030, you'll be back in the money. Every rolling 5 years, people have done very well in Bitcoin, and so you have to have a minimum of a 5-year horizon.
Okay.
Scaramucci's advice is pragmatic. Don't invest blindly. Do the research first. Start small, 1-2% of your portfolio. Why? Because the asymmetry is compelling. If Bitcoin fails, losses are limited. If it succeeds, the upside could be massive. He also stresses time horizon. Bitcoin is not a trading asset. It's a long-term investment. Historically, anyone who has held Bitcoin for at least 5 years has made